You're listening to Let's Talk Macro.
Brought to you by Bandhan Mutual Fund.
Welcome back, everyone. Hi, you're joining me, Ahalya, on another episode of Let's Talk Macro, a podcast series on, you guessed it, macroeconomics, brought to you by Bandhan Mutual Fund. And through all of our episodes so far, we have been talking about global and domestic macroeconomic topics, which are relevant, interesting, and, have a fair bit of impact on our lives if we can tell. Joining us, as always, is Sreejith Balasubramanian, economist in the fixed income fund management team here at Bandhan Mutual Fund. Hi, Sreejith. Welcome back. How are you?
I'm good, Ahalya. How are you?
Good. We're due for our monthly catch-up, as I said, before we jumped into this recording. And a very interesting topic. A lot of people talk to each other when they catch up about what they've been up to, what new places they've tried. But Sreejith and I, we talk about inflation in India today. Because let's be real, that is exactly what is on top of everyone's mind. There's been a recent spike in vegetable prices. We've all been hearing about tomatoes way more than we ever had before. And there's also been a higher than expected print for July. So today's topic of conversation, our catch-up, is going to be all about the major drivers over the last few years, what's really been happening more recently, and what the road ahead looks like. So Sreejith, let's start off with consumer price inflation. That's a good launch point for us, to see how it's behaved in the last few years and whether it was predictive in any way, right? If you could give us some color on maybe the pre-pandemic and pandemic periods, that would be a good place for us to start.
Sure. So let's take a step back, like you said, and look at the major drivers of inflation in the last few years. Pre-pandemic, say for the financial year ending March 2018-2019, so that is FY18, FY19, headline CPI averaged around 3.5% year on year in each of these 2 years. During this period, food inflation stayed very benign, and this was quite broad-based too. If you look at the various food categories, that is. In fact, that was also the period when prices of pulses were falling quite sharply. There were some offsetting factors like vegetables, housing, but those were not major spikes.
Okay.
We also had some sudden rise in inflation in education and health components in 2018, which was likely related to data collection and so on, and not anything related to underlying demand or supply. But overall, FY18 and FY19 were years of benign inflation. This changed in FY20, the pre-pandemic year, that is, when onion prices spiked and the pulses prices recovered. Average vegetable inflation in FY20, the year just before the pandemic, was above 20% year on year. And mobile tariffs also, if you remember, were hiked in end of 2019. This pushed up headline inflation from around 3.5% in FY19 to just under 5% in FY20. But the good thing was actually that core inflation eased. So This is where inflation was pre-pandemic. So FY18, FY19 was benign inflation, and there's a mild pickup in just the food inflation, which is essentially vegetables in FY20 before the pandemic. Once the pandemic hit, during the initial months, we had data collection issues due to lockdowns, and this CPI data was partly imputed using whatever data was available then could be collected. That is, supply issues were also there, and inflation therefore spiked as both food and core inflation picked up. But the interesting thing was, even after the period of data imputation, when data collection stabilized, core inflation did not ease. So price levels there never corrected. So it actually dismissed the hypothesis of higher core inflation being driven by data issues. In fact, it turned out to be quite broad-based too. So food inflation also stayed high as various items like vegetable oils, pulses, spices, and even vegetables picked up. In financial year 2022, core inflation and food excluding vegetables, both remained elevated. It was in FY23 that actually, food inflation is again high, but this time, probably due to some of the other food categories. And core inflation continued to remain high and broad-based. So essentially what I'm trying to say is in the 3 years from the onset of the pandemic, that is the FY21 to FY23 years, was broadly about high food inflation, high and broad core inflation. And this is quite different from what it was pre-pandemic. Now, more recently, like you mentioned in the opening, during April to June this year, we started experiencing favorable base effects and milder momentum in core inflation, which are essentially positives. Okay. Headline inflation started to ease, and it averaged only 4.6% in the June quarter. But that was again, just before the spike in July from tomato prices. So that's where we are on inflation, essentially in terms of the trajectory in the last few years.
Tomato prices, there it is again, the word, the vegetable that we've all been hearing about a lot. No, and it's important actually to acknowledge that inflation is kind of that friend that refuses to leave, but just presents itself in different ways, right? Different natures of inflation that we've been experiencing as a country. So you've given us a broad picture on India's inflation in the last 5 or 6 years from before the pandemic, but also coming to one of the most discussed topics. And, this matters, Sreejith, because it is India. It is a very important factor when it comes to our economy, which is the monsoon rainfall. We are one of the only countries to have this season, right? It impacts our economy for sure. But what does this mean in the context of inflation? Is there any correlation there that we should be paying attention to?
So I think we've discussed about the importance of the Southwest monsoon season rainfall in one of our previous episodes for agriculture, particularly for rice production during the current crop season, which is the Kharif season, and even for wheat production during the next season, which is the Rabi season, through soil moisture and reservoirs which are used for irrigation, and those get filled up from monsoon rainfall this season. So this year, it becomes even more crucial because we had a sharp drop in wheat production last year, and that only partly recovered this year. And we are already experiencing higher food inflation, like we mentioned, from vegetables and even other categories like spices, pulses, and so on. So as far as numbers are concerned, in terms of rainfall, overall rainfall so far this season, as we speak, is about 7% below the long period average. This is the IMD's, the India Meteorological Department's forecast for a 4% shortfall for the entire season, that is June to September. But more importantly, what one needs to note is that the distribution has been quite skewed. Both spatially and temporally, that is, across regions as well as across months. So, for example, if you see Northwest and Central India have received much more rainfall than the southern and eastern parts of India. Similarly, rainfall in June was weak. It actually then picked up strongly in July, but has been extremely weak again in August, except in probably the eastern part. So, not an even distribution there. And on top of this, we already have weak El Nino conditions. El Nino is typically associated with lesser rainfall in India. And most of the global weather forecasting agencies continue to forecast a very high probability of it to continue till early next year, and for it likely to be a strong event. So this is not very encouraging, and because it can impact not just this season's output, but the following Rabi season also, like we just mentioned. So it's really important that we track some of the important data. For example, like crop sowing, for example. During the current season, sowing is picked up for rice, but it continues to lag for, say, pulses. The other thing is reservoir levels. Reservoir levels, particularly in the southern and eastern regions, are below last year in average levels. So we essentially have to see how, let's say, weak rainfall in August now impacts the reservoir levels and even the final crop harvest. The other thing that we look at, for example, is the stock levels. The latest stock levels of the Food Corporation of India, which seem comfortable for rice, but it is only just at the buffer level norms for wheat. Right. So some of these factors need to be, very closely tracked. And similarly, another aspect is the global prices of certain food items. We import, for example, like vegetable oils. These have started to move up again a bit. Yeah. So because we imported, the price really matters there. And let's say any geopolitical impact, for example, could push it up further. So there are these various risks on the horizon, but the good thing is the government has been really nimble on various supply side measures, whether it is related to procurement, open market sales, international trade, and other forms of price rise mitigation. So that's a positive side of it.
Okay, all right. That's a very comprehensive overview, actually, of how the monsoon season rainfall, will impact our inflation scene and the risks, and also how the government is, trying to mitigate any of these potential impacts on prices. But this spike in the prices of vegetables, particularly tomatoes, that we recently witnessed, Sreejith, I think that is the burning question. How is that really evolving? And also the July CPI print, which was well above market expectations. Was that all about tomatoes, or is there more to it?
Yeah, so first thing is perishables like vegetables and fruits are seasonal, and they have multiple crop cycles during a year. But they also have a much shorter life, unlike, say, cereals or pulses, which can be stored. So storage infrastructure becomes really crucial for vegetables and perishables in general. And supply side issues can cause short-term spike in prices. But the good thing is they also then come off quite heavily when fresh crop arrivals reach the market, and to some extent with government measures. And we've seen this before in previous years. Previously, for example, like I just mentioned, we've seen, I think, with onions in 2019, and this time with tomatoes. So in July, as per the official CPI data, tomato prices went up by 214% month on month, which is over June. And that's a very strong spike. But this was not the only upside surprise if you look at the data carefully. Some of the other vegetables and fruits picked up, and spices, which has already been quite strong in terms of price data, moved up even further. Even within fuel, electricity prices continue to pick up for the third month, and there was a jump in momentum in education, and that continued to stay a bit high. So there are these pockets of price pressures which were there in July print, apart from just tomatoes, and these were within food and otherwise. The other thing is global commodity prices. They've been moving up a little bit, and this could start reflecting in WPI first. Apart from the food prices, which are starting to show in WPI already. But that's it. The good part is that core CPI was broadly in line with expectation. When I say core, it is the headline excluding food and beverages, fuel and light. And the other thing is that tomato prices are coming off quite sharply as we speak. So in the last 1 week to 10 days, it's come off quite well. So that should help. Yeah, and food price momentum should moderate from August. But the headline numbers would still likely stay elevated in the short term, particularly for the current quarter, that is the September quarter.
Okay, so maybe let's just focus on, the core CPI that's been coming off. You said, how is that looking? And could you also talk a little bit about the factors that will impact this in maybe the coming quarter or so?
Yeah. So one, like I said, there are some base effects from higher readings last year. We had higher readings last year, therefore that helps in slightly lower readings this year when you look at the year-on-year numbers. Two, if we look at the seasonally adjusted momentum, that is a month-on-month change in core inflation, this has started to ease. Not a lot, but it has actually started to moderate mildly in the last 5 or 6 months.
Right.
Three, the various CPI components, if you look at it, excluding food and fuel, petrol, diesel, and gold, which actually makes up core inflation, like clothing and footwear, for example, housing to some extent. Now, housing data, there could be some divergence here with respect to the ground level data. Nevertheless, even that, and even household goods and services, health, and so on, some of these categories have witnessed some easing in momentum. But overall, it's a decently broad start to core inflation momentum inching down, I would say. And India's core inflation in recent years have been driven more by goods than services. Now, this is one reason that analysts attribute is because rural core inflation has averaged well above urban core inflation, which sort of suggests rural demand is possibly higher, and typically rural demand is more towards goods than services. And therefore, you see that India's core inflation in recent years have been driven more by goods and services. The other factor is also that in India, we don't have a major surplus household savings from pandemic-related stimulus like in the US, right? But anyways, the momentum that we have been seeing in goods, the higher momentum there compared to services, is finally coming off gradually, and services continue to be mostly soft. Finally, the growth environment, specifically the external environment and its impact on the domestic economy. Global growth is slowing and set to slow further, although it's not happening at the pace one would have expected, especially in the US. But Europe is slowing, and China particularly has been weak with its property sector not recovering, economic reopening faltering. Most of the recent data reinforcing this, and there's been no meaningful policy stimulus coming through yet. I think we discussed this elaborately, and again, in one of our previous episodes.
Yes.
But all these points are essentially supportive of a continuation of a gradual moderation in core inflation.
Okay, cool. So I guess there is a silver lining, as always. Yeah, I think finally my question for you, Sreejith, is, as we always do for the benefit of our listeners, could you leave us with 3 key takeaways from today's discussion on India's inflation? I think that will be reassuring for them to hear about.
Yeah. So one, the trajectory of India's inflation in the medium term. So until almost a year before the onset of the pandemic, we had fairly benign food inflation, and this was quite broad-based. In FY20, this picked up a bit, but this was concentrated in vegetables as onion prices spiked, and like we discussed, pulses price growth turned positive after 2 years. But the good thing there was core inflation moderated to around 4%. But once a pandemic hit, the next 3 years have broadly been about high food and core inflation. And this has been quite broad-based, which is sort of different from the immediate years pre-pandemic. To the current situation and risk to food inflation. So tomato prices spiked in July, but so did prices of some other food items, which increased a little bit, and even in few non-food items like electricity. And like we discussed again, global commodity prices have also increased. There are also risks from monsoon rainfall, which is weakened in August, and an El Nino event for the current and following crops sowing seasons, essentially for the rice and wheat output.
Right.
The government is taking various supply side measures to mitigate any impact on prices, and even sowing data has improved. But one needs to be really on top of this, for the next few months to assess the final impact there. Three, the good things that we discussed is tomato prices are falling sharply this month, which is good for consumers. And the other part, like I just said, is core inflation, which has started to moderate recently. And for the reasons we discussed again, both domestic and global, it could continue to gradually moderate further.
Well, I have to say, Sreejith, it's not you, it's not me, and it's not India's inflation, but tomatoes that take the spotlight from today's podcast and maybe the past month or so. Thank you so much for all of these valuable insights. The path of inflation, it seems, after the onset of the pandemic has definitely been different. And as of now, there are reasons to be cautious for all of us, particularly in the area of food inflation, given all of the risks that you mentioned. But at the same time, there are also certain positives. Core inflation has finally started to moderate, even though it's mild. That's still, a hopeful sign in the last few months. And this could continue gradually. So let's keep our fingers crossed and hope that our predictions are right. Thank you, Sreejith, for giving us a snapshot of the situation on ground, as always.
Thank you.
It's been great chatting with you.
Same here. Thank you.
That's it from both of us today, folks. We will be back with another episode of Let's Talk Macro for another catch up on the area of macroeconomics. Thank you for tuning in. Catch you on the next one.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.